Hey friends, this is Chris. Welcome back to the channel. So, big stories today is Starbucks stock is crashing, and so is McDonald's stock. And I want to have a chat with you about investing and sort of what's going on and how to understand today's market. So, first, basically, Starbucks came out with like a surprise preview of their earnings, saying that sales are going down, especially in the USA. I think it's something crazy like 10%. Yeah, that's in North America. So, not just USA, so that would be USA and Canada, down 10%, which is pretty nuts. Starbucks actually recently hired a new CEO that was the former CEO of Chipotle. So if anyone could turn it around, I think he possibly can, but nothing is guaranteed in this life. Sales are also going down for Starbucks in China as well. And then talking about McDonald's, they have like an E. coli outbreak. I think there's 49 people getting sick. Yeah, 49 cases. Again, this E. coli between September 27th and October 11th. So recently, and this is over, I guess, 10 different states. If you guys haven't heard about this stuff, you can let me know. And essentially, now we're saying, I guess the problem is with the quarter pounders. So I'm putting both these stories together because the question would be when something bad happens to a good company, that's essentially, some weakness in your chance to buy in. Would these be the kind of things that you'd want to invest in? Now, first, I want to caveat this saying like you make the decisions that make sense for you. I kind of want to more talk about things that I look at when I look at like a company, these kind of things, or if you just want to go index investing, right? Buy a basket of stock, what would be the advantage of that? So first, yes, we talk a lot about on Tesla on this channel. It's fun to talk about that, but I do want to talk about other businesses as well because the fundamental, thing with investing, if you're going to do individual stocks slash companies, is know what you're investing in, know what their business model is, know where their profits come from, and understand essentially are they a growth stock or are they like a value dividend stock, right? Are they a steady business that essentially you're holding it so that they can pay out and share their profits with you on a regular basis. So in terms of something like Tesla, and I'll get to Starbucks and McDonald's in a minute. The idea of why someone would want to buy like a Tesla stock is because you think, okay, I'm giving Tesla my money now. They're going to grow their sales like crazy, and more people want to buy said business or said Ponzi, if you want to think of stocks in that way. And you think the stock is going to go up, right? You're speculating on stock values going up. If you're looking at something like McDonald's, sales slash revenue slash profits have been pretty steady for years for a company like that. So you kind of know what to expect, basically, right? And you already know what McDonald's business is. And then the question is, are you okay with, and essentially the difference between, say, something like a Tesla or a McDonald's would be, I'm trading, volatility or chance of higher risk, and I'd rather go with something safer like McDonald's. But my upside maybe isn't is great because how many more McDonald's can you possibly build in the world, right? When you're talking about something like Starbucks, which is an interesting one, is Starbucks is actually a mix between growth and value slash dividend. Why do I say that? Because I actually announced today that Starbucks, in order to keep investors interested in the stock, I think they're upping up the dividends. So there's a bit of a problem with that though, because whenever you have a company say that does pay you a dividend, that means they're just giving you the money opposed to reinvesting in the business that could theoretically grow the company more, right? So, for example, dividend stocks, Nvidia, Microsoft, Apple, they all have dividends actually. They're not very big though, because you don't necessarily buy it for the dividend, but they do share some money with you. And again, the question would be, say, for example, an Nvidia situation, what would you rather have them share profits with you today, or reinvest in the company to maybe have a chance to grow it, even more? The serious question though was, say, Starbucks, and we'll talk about Tesla and McDonald's and compare the three. Starbucks, they're facing declining sales, and I think, in my opinion, a real big problem with the change in sort of needs of that kind of business. Why? I think a lot of it is work from home, which would be one. So like, are people going out as much as they used to those kind of places? And then two, you have massive amounts of competition. So I can't speak for Starbucks in USA why their sales are down 10%. I'm just not there. But I can tell you here in Korea, we don't really go to Starbucks unless we have a gift certificate or there's some sort of crazy coupon. And I'm not alone. That's been something that I've been seeing reports of, like, when do people go to Starbucks? They have like a loyalties reward program. They have discounts slash coupons. They got to get people through the door. And so that's something that they're, looking into. Does that hurt our profits or not? The other thing too with Starbucks, and actually it's related to Tesla, is Starbucks really expanded. And one of the things the CEO said recently is that like their drink menu is too complicated. And it's kind of funny because whenever you go to Starbucks, there really is like a lot of choices. And from that perspective, maybe just stick with the ones that are most profitable, right? Like simplify the menu. Maybe it's less confusing for people. Focus on just the one or two products, etc., and make money on that, right? Whatever the highest profit margin things are, I'm sure he'll come up with a way to do that. Is it guaranteed? Absolutely not. And this is kind of a fundamental question. Again, it goes back to investing, and it's fun to talk about this stuff, guys. We're all making guesses of like, wow, what do you know as a consumer and your feelings about Starbucks, say for example, do you think they can turn around? Is that Starbucks a necessary company in your life, right? And compare that to say something like McDonald's. And I'd love to hear in the comments, which you think that you would rather invest in McDonald's or a Starbucks, knowing their business models. And it's fun to talk about this stuff too, because you all pretty much know what these companies are. Now, what's interesting in talking about, say, this kind of industry, my understanding, I think TGIF, the Fridays one, I think they're going to file for bankruptcy. So I know in that world, that sort of casual dining, so it's not fast food, it's not quite luxury, it's kind of in that middle. That market's really, really struggling. Plus, prices are crazy high for that stuff. And these kind of companies, they also represent where we are as an economy, right? Are people eating at home? Are people going out? What is necessary, not necessary? Now, Tesla, for example, the car company, right? It's electric car essentially. That's even further, in terms of like purchase price, and you're reaching a different consumer, but like a much bigger purchase than McDonald's or Starbucks, right? These are daily purchases for people, whereas Tesla's like maybe, I don't know, once every 4 years, 5 years, whatever, often people are buying said cars. The thing with Tesla is like, if the economy goes south, I still think people are going to spend money, but not necessarily on a big purchase. So I'll give you an example. I saw today, Philip Morris, their stock went up like 8%, something like that. So they had a good earnings. During times of bad, situation, maybe people buy more alcohol. That's a real thing. People go more to the watering holes. That's a real thing also. And theoretically, people buy cigarettes more. The cigarette one is kind of, or tobacco, I should say, is an interesting one because their markets are more expanding overseas. So in USA, the tobacco consumption has been going down, whereas in other places, like I can tell you in Korea, here people still smoke, which is kind of interesting. Now, whether or not this stuff interests you or not, right? Talking about the fundamental business of Starbucks, McDonald's, Tesla, this kind of things. Um, there's more to the story than just understanding their business. You also want to look at their fundamentals, or refer to, what are their financials. Now, these kind of things can be a little bit tricky. Why? Because I'll just be really frank with you guys. CFOs of these kind of companies, um, they so although it's all public information, they can kind of move money in around in ways that can sort of make things look better than they are, or make things work, or whatever. But it's all going to depend on the company. Every company is different. In the situation of Tesla, there has been accusations of fraud over there. There's a lawsuit pending, and there's like, I made a video on this. Is like a long laundry list of stuff that Tesla could be doing shady. Starbucks and McDonald's, I think chances are of their shady practices are probably much, much less. The larger, how can I say, longer, larger is not the, well, I'll say larger and longer a company's been around, you kind of know what to expect, right? And after so many years, this is sort of why, investing in older companies and more stable companies is a little safer, is because it doesn't vary so much. And if anything actually comes out and, throws everyone off, it like is like huge red flags, right? Um, Whereas the newer companies, and talking about investing, is that no one's really quite sure what their business model is, other than a whole bunch of promises. That would be something like a Tesla. The thing is, and I was talking about, if this stuff is interesting to you or not. Um, you can do different things with your investing choices, right? So some channels will tell you, the only choice out there is index fund, and then you should just do that and only stick to that. Other channels out there say, hey guys, I can beat the market. Just pick these hot stocks and give me a bunch of money, etc. I'll just give you a couple words of advice, and a lot of people try to, ask me all the time, what do I like, etc. Like I said, I'll just give you some words of advice. One is, if there are channels out there charging you money for the hottest stock picks, etc., generally just stay away. I'd say 99.9, if not 100% of that kind of stuff is scam. And I understand this, that people want that edge, that secret sauce, etc. And I'll just say, just be very, very careful out there, because essentially how YouTube and social media works is, if you want to be popular, you just tell people they're all going to be rich, and you make a bunch of promises you can't keep, and you just play whatever is the hottest in the algorithm on YouTube. So be careful with that. Two, if you do invest in individual stocks, definitely spread it out, diversify yourself. The biggest problem that I see happening among retail investors is over leverage on just one or two names. And if you're right, that's fantastic. But what happens is you get overconfident, and you start thinking that you can't lose, right? So guys, it's great to have a winning, trade in the market. It's fantastic, but just always remind yourself that, hey, I did great, but control yourself. Okay. The worst thing right now, what we have is this people that they just lose control. I've seen it so many times. Guys, it happens. I'm guilty of it. My wife is guilty of it. Um, you got a winning strategy, you think, and then you're just like, oh my god, I gotta go more and more into that said winning strategy. Just always remind yourself that stocks go up and down, and sometimes you get lucky. It just happens. So this is sort of why essentially I talk about going back index investing is relatively safe, or much much safer than I could say the individual stocks, is because basically you're forcing yourself to diversify, so not any one choice that you make is totally going to sink you, right? But with that said, the reason why you would want to do individual stocks, right? Say whatever crazy growth stock, is that you certainly can get a lot more gain. That is entirely true. But do be aware, you can certainly have a lot more loss, a lot more risk. And this is something that I just want to be honest with you about, this kind of stuff. The thing you always got to ask yourself is, okay, given choices, would I be happy with, say, I'll just give you an example, 5 to 10% returns every year, right? Would you be happy with that? This is a simple example. And if you were to take that, say, 5 to 10% returns every year, would you also be okay if your portfolio went down, say, just for example, 5 to 10% every year, just for example, right? It could fluctuate 5 to 10% either way. When you do, say, individual stocks, and this is sort of how YouTube works, guys, it's true. You could go up, 200, 300% in a year on an individual one, but it could also go to zero. That happens to a lot of people. And so this is where you have to manage the risk that makes sense for you. I'm fine with you guys managing money that is fine with you. What I try to do on this channel is just inform you on various businesses that's happening, the overall economy, and just keep you informed. Also, I like having a community with you where we ask each other questions about certain things, right? I'll give you examples. So when I try to say keep overall informed, the IMF came out today, this International Monetary Fund, saying if tariffs do go in place, and this could be under Trump or Harris, Trump is more strong on the tariffs than Harris, it'll slow global growth. So what does that mean? That means it's going to be harder to find growth, because essentially that's what you're looking for when you invest into a company, is like, I want to invest in something that is going to grow my profits and grow my money. It is much easier, and this is one of the positive of having stocks. It's much easier just to buy a stock and this, another company, established company, let someone else do all the work, you take ownership, opposed to starting your own business. And it's the same kind of thing, right? You can start your own business. It's going to take a lot more time from you, a lot more energy. The risks are all shouldered on you now, right? Yeah, you're going to get all the gains, but you also get all the losses. So this is sort of why a big advantage of investing in something like stocks is that you're essentially giving your money to someone else. You may get less gains than, say, the CEO of said company, but you have a lot less of the headaches. And we're going to continue having these conversations. I just want to talk about with you guys the stuff because I saw the news on Starbucks, McDonald's, and Tesla. My overall point of view on this stuff, if this kind of stuff hurts your brain, that kind of thing, that's why you stick with sort of index investing, that kind of stuff. And I enjoy having this conversation with you. I know you're probably saying, so should I buy Starbucks, McDonald's, or Tesla? I'll leave that decision up to you. I just want to make sure that you're informed. Thanks for watching, everyone, and I'll catch you in the next video.